This is the One of a Kind Financial Show Daily. I'm your host, Mike Milligan. Yesterday, Apple passed Nvidia as the most valuable company in the world. Overnight, South Korea's stock market extended a month-long rout, and this is the biggest earnings week of the year. Apple, Meta, Amazon, Microsoft, Alphabet, all reporting the next 3 days, plus the Federal Reserve meets. So is the story the consumer or the AI? We've been covering that on this show over the last couple weeks, and we'll continue doing that today. This week, though, is going to tell us which one is winning. Educate, Coach, Plan. Never miss a moment.
Be one of a kind with Mike's Plan.
Let me give you the numbers first, then walk you through what actually happened. The close on Monday, the Dow was up 262 points or 0.5%. The S&P was basically flat, up 1 point, closing at 74.13. The NASDAQ fell 44 points. On the surface, a quiet day. Under the surface, one of the more meaningful reshuffles I have seen in 2026. Here's what happened. Nvidia, the AI chip company that has been the most valuable company in the world since June of 2025, fell 5% money, the trigger. A Wall Street Journal report that Nvidia is in talks to provide up to $250 billion in financial support for an OpenAI data center build-out. That's not a customer contract in the traditional sense. That is Nvidia effectively financing the customer that then turns around and buys Nvidia chips. Wall Street looked at that and said, that is circular, and they sold. At the same time, Apple rose 1%, closed at a market cap of about $4.95 trillion. Nvidia closed at $4.77 trillion. For the first time since April of 2025, Apple is the most valuable company in the world. And here is why it's interesting from a financial planning perspective. Nvidia is up 4% year to date. Apple is up 24%. A year ago, no one was writing that sentence. Apple was seen as the company falling behind on AI. And yet, the company with the highest recurring services revenue in the world, the company that quietly monetized over 2 billion devices in the field, and the company that is not spending $200 billion on CapEx is back on top. Apple reports Thursday after the close. That'll be Tim Cook's last quarterly meeting as CEO before he passes the torch. That will be a headline event. And this is the pattern I want you to see. Last week, the story was that AI CapEx was pushing hardware companies like Google and Tesla into negative free cash flow. Yesterday, the story was that the market rewarded the company that has already made the transition, Apple, and started to question the company still in the middle of the biggest spend, Nvidia. That is what pattern recognition in the market looks like. We're not chasing returns. We're not trading the shuffle. We're watching what these transitions tell us about the American economy, about the customer, and about the consumer, and about AI, while at the same time we're building one-of-a-kind financial plans. Those plans should not depend on being right about which name wins the next quarter. Those plans should be to help you make decisions so that you can go then live a one-of-a-kind life.
Be one of a kind with Mike's Plan.
I want to answer a question that comes up frequently during earnings seasons. And it's something that I answer on the one-of-a-kind financial show on the radio on the weekends. Why do quarterly earnings matter so much in the market? Here's that answer in somewhat plain English. Publicly traded stocks are priced on expectations of future cash flow. Every day, all day, the market is doing one thing, trying to guess what a company will actually earn 6 months, a year, and 5 years from now. Analysts publish estimates, companies give guidance, investors buy or sell based on the gap between expectations and reality. 4 times a year, earnings season comes. The company will open the books. They'll talk about revenue, expenses, cash flow, CapEx, guidance. And the market compares reality to expectations. If reality is better, the stock usually goes up. If reality is worse, it usually goes down. If reality is the same but guidance is bad, it usually goes down. If reality is worse but guidance is better, sometimes up. Is that clearer? Well, let me say it one other way. Earnings season is the audit of the story the market has been telling itself for the last 3 quarters. It's checking what it thinks, what it actually thought would happen to ensure that companies are living up to those things. And this week is the most concentrated week of the year for that audit. Today, Tuesday, Coca-Cola, UPS, Corning, and Boeing. Coca-Cola is the read on the global consumer. UPS is the read on package volume, which is the read on business activity. And Boeing is the read on airline economy and industry spending. Also, Alphabet and Microsoft, 2 of the biggest cloud providers in the world. This is where the AI CapEx conversation really gets tested. Microsoft has been the model. Alphabet raised full-year CapEx guidance, and this quarter will show whether the returns are actually showing up. Wednesday after the close, Facebook. We'll see what digital advertising has done for them. AI infrastructure, Reality Lab losses. Meta has been the surprise winner of the mega cap group this year on AI-driven ad targets. And then Thursday after the close, the biggie, Apple and Amazon. Apple for service growth and iPhone cycle. Amazon for Amazon Web Services growth and retail margin. That's a night where roughly $8 trillion of market value reports inside of an hour. And on top of the earnings, the Federal Reserve meets this week. As of yesterday, CME FedWatch had the odds of a rate hike at almost 40% for that meeting. That is a big move given where the odds were 2 weeks ago. Whatever the Fed decides Wednesday afternoon changes the borrowing costs for every company reporting after that decision, and for the consumers, for their credit card rates, potential mortgage rate changes, and then just the guidance on where our economy stands. So when you hear me say this is an important week, that's what I mean. 5 days, 6 mega cap earnings reports, 1 Fed decision. The market will finish this Friday with a very different story than it started on Monday. We'll see. Is it the consumer or AI? That's why earnings matters, not because you should trade on them. Remember, this is for educational purposes only, because though they are the moments every quarter when the market has to check its work.
Be one of a kind with Mike's plan.
I want to quickly walk you through a story that's not on the front page in the U.S., but is absolutely relevant to the plan. South Korea's stock market, the KOSPI, was the best performing major equity market in the world in 2026 heading into the summer. It was up 60% for the year at its June peak. It closed at a record 9,114 on June 22nd. Yesterday, the KOSPI closed at 65.16. Let me read you those numbers again. June 22nd close, 91.14. Yesterday's closed, 65.16. That decline is about 25% from the June peak, and that happened in 5 weeks. On Friday, it fell 6% in one session. It's now had multiple sessions this month that triggered circuit breakers, automatic trading halts that only kick in when that market falls 8% or more from the previous day's close. There's 2 reasons. First, the KOSPI is highly concentrated in semiconductor stocks. Samsung Electronics and SK Hynix alone make up over half of the index. Both are AI chip suppliers. As global investors have grown more skeptical about how quickly the AI build-out will pay off, they have sold the most concentrated bets first. Second, the Bank of Korea raised its policy rates 2 weeks ago to fight inflation, and that hike hit an equity market that was already highly leveraged. Here's why it matters to your plan, even if you do not own a single Korean stock. Concentration risk is real. When one theme drives 60% of a market's return, the same theme can take 30% of the market value back in a matter of weeks. That is not a Korea problem. That is a math problem. And it's the same math running underneath our own U.S. stock market, where 7 companies drive an enormous share of the S&P's 500's return. That is why a one-of-a-kind financial plan is not built around the story of the week. It's built around your income, your time horizon, why money's important to you, and the way you want to live your life. No matter whether AI pays off in the time frame Wall Street expects, the one-of-a-kind financial plan will help you make decisions so you can live a one-of-a-kind life.
Be one of a kind with Mike's plan.
Let me summarize where we are. Apple is back on top. Nvidia is down 5% of a report about circular financing. This week is the biggest earnings week of the year. The Fed decides Wednesday, and South Korea is telling us what happens when a market becomes too concentrated in one theme. Tomorrow morning, same time, same seat, we will unpack Google and Microsoft. Ask 3M what last week's story was. Tonight is the biggest test yet for AI CapEx thesis. Educate, coach, plan, never miss a moment. This has been the One of a Kind Financial Show Daily. I'm your host, Mike Milligan. I'm an investment advisor representative with Advisory Alpha LLC. Ideas by Mike, doing business as One Oak Financial is an unaffiliated entity of Advisory Alpha LLC. This has been for educational purposes only. Do not make any investment recommendations or do not make any investment selections, buy or sell, based off anything on this podcast without first speaking to a licensed financial professional. See you tomorrow.